Hello, this is Susan Riley, your hostess with the Deal Scout. Welcome to another fun episode. Today we have a guest, someone I've known for several years now. This is Christian Peters. He's a commercial broker of Dark Horse Commercial from Miami. Welcome, Christian.
Thank you so much for having me, Susan. Appreciate the opportunity to chat.
Yes, I'm so happy you're here today. You and I have a little bit of a history together, and so that's why it's really fun for you to be here. I met you a while back when I joined your listing agent accelerator program to learn how to be a better listing agent in commercial real estate. And I learned a whole lot of stuff about listing. And after that, I learned a whole lot of stuff about how to be an investor. And it was clear to me that you knew a lot about commercial real estate. But I guess it's not surprising because you've been at it a while. Is that right?
But yeah, I've been at it a minute or so.
Yeah. Yeah.
I get a lot of people ask me, how long have you been in the business? Usual conversational stuff. And I tell them 48 years. And they're like, huh, don't look that old, right?
Yeah.
And it's basically, I'm second generation, right? So I've been in it since the time I can remember. Every, dinner conversation was something about, because both mom and dad worked in the business. So every dinner conversation was like, what tenant's moving in, which one's moving out. I was going to planning board meetings in grade school, when dad would pick us up, that would be like a fun Tuesday night. I learned about capital gains taxes at the dinner table, before I was a teenager, So like a lot of people, they might like have sports in common with their family. Like I grew up on real estate. Like it's all I've kind of ever known. And I absolutely love the business. So
So your
really
family, what kind of properties did they have?
So we developed, right? So we developed like light industrial properties. So some of my first memories were like sitting on dad's lap on a forklift, unloading rebar for, a slab we were pouring or something,
Right.
So we developed a lot up in North Jersey, about 20 miles outside New York City.
Okay.
So grew up around it. And at a certain point in the early 2010s, we wound up selling. I wound up relocating into Florida and starting Dark Horse Commercial. We're coming next year will be actually our 10-year anniversary. So really excited.
Okay.
Yeah.
So did you always think you wanted to be a broker? Was that sort of the intent for you to go your whole life?
Not exactly, but I found it to be the most logical entry point to becoming an investor, right? So we sold our properties up north, and I wanted to basically replicate similar to what we had up there down south, just someplace that's warm with palm trees. Like I'm done,
Sure.
scraping windshields. I'm done shoveling sidewalks. No more
Right.
snow plowing for this guy. So what I decided to do is move down, become a broker, or become an agent first, then a broker. And then what I realized is it would give me front row seats for deals, right? Because if you think about it, there's a saying I have, right? We see everything before anyone sees anything. So as brokers, if you are pounding the phones, doing what good brokers do, you will have access to deals. And sure enough, once I started getting my feet wet, got Dark Horse established and everything, I started seeing deals come my way. So in 2000, a little before COVID, I put some properties under contract in 2019, wound up closing on them right before COVID. And that's when I, said, ooh, I really, really like this. And I took a little bit of a departure from brokerage to train students and so forth. Because I incidentally, I came across a really good method for listing properties, and the most lucrative skill in all of commercial real estate is listing properties, So what I did was after I was able to get the buildings up and going and stuff like that, I really started focusing on helping others, So I took a little departure for a while, but now I'm back in the brokerage world again, and I absolutely love it. I love the competition. I love the game, and it gives me access to more deals,
Right. Is there a certain asset class that you like?
I don't like it. I love industrial, right?
Yeah.
For me, it's just it's what we used to develop, so I kind of understand it the best. And from my perspective, it's one of the most inelastic. That and multifamily, I look at in terms of like inelasticity to market demand, right? I'll give you an example. Like I mentioned, we developed about 20 miles outside New York City. So the market factors there were in a bad economy, people get laid off from their job and they say, you know what, I've got 20 years of experience, no pay me what I'm worth. Let me go start a little business out of my garage. Well, guess what? We had incubator space. So we were like step one out of someone's garage. So we had anywhere between like 800 and 3,000 square feet would be like our kind of our sweet spot. So in seeing that, I realized, oh man, like it doesn't matter if the market's doing well, because in good markets, those people that were in 3,000, they go to 5 and then 10 and then 20. And you know, as the market cycled, I just noticed how inelastic it was. So like just no matter what was going on in the economy, industrial was just chugging along. Whereas I couldn't say the same for retail or office, because we had some retail and office space, and I just would see that those were the hardest ones to rent in down economy. So I just I came across my business plan just because of what, you know, I had been doing property management for about 10 years, and just seeing like how well the industrial product fared even in up and down years. Because I was around for the '08, you know,
Mhm.
debacle, you know, for those several years, and seeing how things just kind of moved around. And you know, it's the root of why I do what I do today.
Okay. So I mean, you've been at it long enough. You've seen cycles, the
Oh,
ebb and
sure.
flow of different things, and you've spoken before about the 18.6 year cycle. I'm not sure what that is. Can you define that?
Sure, sure. Unless you nerd out on economics, most people have not heard of it, right? So what it comes down to is, so I studied economics in school, as part of like my business curriculum, and I always was interested in kind of like how the market ebbs and flows, right? So there are economists that have gone back and traced, you know, all the way back to the founding of the United States, but more specifically from about 1830 or 40 all the way to modern day. They've traced market cycles, whether it's real estate, whether it's business cycles, and so forth. And what they find is it's not perfect, but on average, the cycle repeats itself every 18.6 years, you know? So like as an example, like in my lifetime, in 1987, we had the savings and loan debacle, right? Right
Mhm.
around 2000, 2001, right? We had the dot-com burst. And then a few years later, we had, you know, the '08 subprime crisis. And then about 8 years later, we had COVID. COVID was one of those mid-cycle events. But the point is, if you look at on average every 18.6 years, I look at the calendar, I'm like, okay, it's 2025 today. Things were getting kind of ugly in 2007, you know, 2008, and that's when things fell apart. So I started looking at taking that concept and applying it to brokerage and as well as investing.
And you think that it's applicable to be applied to real estate as well?
Oh yeah. Yeah, because you
Yeah.
know what happens in the economy affects real estate. You know, the stock market tends to be a little bit more volatile, so that's going to be the one that's going to be affected first. And then after, you know, real estate takes longer for houses and buildings to sell than stocks per se. So I think I don't think it's going to be applicable. I know it is.
Mm.
The question of when, you know,
Hmm.
like I liken it to the seasons, right? So it's like, for instance, you if you live in a place that has four seasons, we don't here in South Florida, but
Yeah.
if you're up in, let's say, New York, New Jersey, whatever, you
Mhm.
know that winter is going to come after fall. Sometimes winters are more severe than others, okay? But sooner or later during winter, you're going to see the trees start to bud, the daffodils start to blossom, and next thing you know, spring comes. And then spring turns
Mhm.
into summer, and then next thing you know, is the weather starts to cool off, etc. So you just know instinctively that the four seasons are there. The exact same thing can be said about the economy, right? There's four market phases, you know, so you have your expansion, your peak, you know, your recession, and your trough, or your recovery, right? If you look back over the last, you know, 150 years, you keep seeing the same thing over and over and over repeating itself. And
Mhm.
so my thing is, I don't want to guess what the next step is. I want to anticipate the next step, right? There are two types of people, I always say, like the people that you wonder what happened, and the people that anticipate what happened. So I like to try to utilize this information, and for other investors and agents for that matter, to kind of anticipate what the next step is, so you can be there before it occurs.
Sure. So where do you think we are right now in those four cycles that you just mentioned?
Yeah, yeah, that's a great question. So I believe we are at peak, right? And I'll tell you what. Let's do a yes or no for this, right? And I'll read out some symptoms of peak, and you tell me yes or no if you think they're going on, right?
Okay. Hmm.
High demand for housing,
Yes.
Okay. Wage growth.
No.
Okay. Job growth. Unemployment's pretty low now.
Unemployment's low. Yeah.
Okay.
Yes.
Right.
Mhm.
Occupancy rates are up.
Yes.
Mhm. Housing inventory has dropped.
Yeah.
Okay. Right. Uh, so price increased.
Prices have increased.
Deals
Yes.
are scarce.
Deals are scarce.
Investors are overpaying.
Yes.
People think that rents and prices will continue to rise.
Yes. People
Okay.
think that. Yeah.
So that's leading into the peak, right?
Hmm.
That's the expansion part. Peak is when the prices plateau, right? We're starting to see. I think that we're right at expansion. I think is done. I think that 2021 to 2024, let's call it, was like the tail end of the expansion. But
Hmm.
right now, so what I've noticed is that the houses have had a higher days on market lately, right?
Right.
Um, so sooner or later, right, the interest rates will start to come down, right, and some of those houses will start to sell, right. But what that might do is that might start turning the price of housing down, right. So when you start to see that, that's when things start catching up and reaching equilibrium. You've been in buyers markets before, right? Have you
Yes.
ever?
Yeah.
Okay,
A
and you've
couple
been in
years
sellers
ago.
markets before, right?
Hmm. Hmm.
So
Yes.
I bought my first house in 2005, and I remember feeling lucky just to be able to get a seller that would sell to me at that point, right? And then because we were in just an extreme seller's market. Well, fast forward 7 or 8 years after that, it was an extreme buyer's market when there were more sellers than buyers. So we're right at that point where like things are just, it feels like it's just about ready to tip. Not now, but I think about 12 months from now. You know, there's an economist that I follow, Philip Anderson is his name, and he has a lot to say about this. You can follow him on YouTube or whatever. But for those of you, if you want to get really nerdy, there's a book called The Private Life of Real Estate and Banking, and he goes way in depth over these cycles. And what we find is pretty similar. It's just like we again, just like the seasons, we don't know when summer's going to be over, but we do know fall's bound to come, and we don't know when fall's going to be over, but we do know the first snowfall is going to come. So it's just
Sure.
we don't always know when, but we do know what's next, if that makes
Hmm.
sense.
Hmm. Hmm. So, okay. So you're seeing us at the top of the peak.
Hmm.
And so things you are thinking are going to start slowing down. What do you think that investors should do to prepare for this?
I think if you can get top dollar for your properties that you plan to hold less than 5 years, do it now, right?
Okay.
If you are planning to sell in the next 3 to 5 years, because what we do know, okay, if there's that old saying, those who don't study history are doomed to repeat it, okay? I remember in 2015 doing a CoStar report to and like sending like an email blast out to people showing, or maybe it was 2016. 2006 is where it peaked, and then we hit this major trough. And property values in 2015, or yeah, I think it was 15, were just getting back to the 2006 peaks. So there was a 10-year gap where a major event happened, right? The whole Lehman Brothers subprime crisis, and then the property values fell, right? So similarly, I'm looking at it like, okay, when's the next recession going to come? You know, because we know there's going to be some sort of downturn because we've been going on a positive upward trajectory for many years now, 8 or 9 years. COVID was just like a little kind of sideways, and then it went took off. So I look at it like people that are ready, that are considering selling in the next 3 to 5 years should sell now, because imagine you're 70 years old and you're like, you know what? I just retired. I want to get done. We are no question at one of the highest markets we've ever seen. Can you imagine having to wait till you're 80 to cash out on those properties because we have a downturn and you can't get what the property is worth today? So I would highly recommend that for people that have properties that maybe are they're looking to sell, or that can be sold via FHA. Those are the types of properties also that I think would anything that would be suitable for FHA, it would be a good idea to sell sooner than later. Why? Because in 2 years from now, government changes their regulations. Not as many people might be eligible for FHA. Maybe they lose their job, maybe a variety of things can occur. So if people are looking to, if they have properties they're looking to sell in the next 3 to 5 years, people that are looking to sell FHA, those are two things I would definitely consider. If you are buying properties, right, I would underwrite with caution. I would underwrite a little more conservatively. Why? Because we just don't know what the rents are going to be 2 years from now, right? I know what they are today, but if you underwrite with 10% more vacancy than you currently have and 10% lower rents, you should be fine, 8% and 8%, something like that. But you have to account for future unforeseen circumstances. Susan, did you predict COVID?
No, of course not.
Neither did I, right? I don't have a crystal ball just like you don't. So I look at that like, what we don't know, we can underwrite for. We can underwrite for conservatively. What I do know is this. I was managing about 125 tenants in 2008. And one thing we did see is in the worst generational downturn since the Great Depression, okay, our rents receded about 20%. And it took about 4 or 5 years for them to come back. Now, that's in the worst market in the last 75 years. So I figure if you do half as much as that, you should be safe for the next downturn.
Sure. Okay. Okay. Yeah. So what do you suggest to all the real estate agents that you're coaching with getting listings? What do you suggest to them as to how to weather the upcoming downturn?
So what I recommend is learn how to list properties, right? There's a few things you need to learn how to do. If you think about it, what typically happens in a market downturn? Okay, properties stay on the market longer because there's a separation in between what the seller wants and what the buyer's willing or able to pay, or what the banks will let them pay, right? So what happens is there's a gap between those two, and what happens? Properties sit. So there's more expireds. Okay. At the same time, a lot of the agents that were living, deal to deal, and trust me, it's a large percentage of them. I've had 4,500 one-on-one conversations with agents. Trust me, I know like how most people are. I have a pretty good thumb on the pulse of it. And what I've seen is that most of them are like living one deal to the next, one deal to the next. So knowing that, probably 20, maybe 25, or even 30% of agents will exit the market. So if you know how to go after expireds, you know how to take listings, and there's 30% less agents, sounds to me like a recipe for an awesome couple of years. I remember years ago, this is probably 15 years ago, right when I was getting into brokerage, I remember speaking to an older lady, and she had been in brokerage for a very long time. Like she was probably in her 70s, right? And I said, Kathy, like, when do you make the most money as a broker? And she said, I make the most money in the recovery years. And that always stuck with me. And it's because most agents can't hang, and the ones that can and make it through and have a good solid business plan and have planned for the future and know how to take listings, they do quite well. I'm sorry, you're muted, Susan.
Oh, I'm so sorry. I don't want any racket in the background to distract you or me. So that's why I hit my mute button sometimes. So that's good advice with sellers of property, buyers of property, and also with agents. And do you think it's possible that we could have this soft landing? They keep using that word in the media right now, of a soft landing, where it's really not going to be that painful. Do you think that's a possibility?
I'd like to think so, but I always say if you plan for the worst, then whatever happens, you're prepared for. There are some things that you can do, in the event of a soft landing. It's just. Have you ever been on eBay before?
Oh yeah, yeah.
Okay. Have you ever
Sure.
overpaid for anything on eBay?
Yeah,
I definitely have. Right?
Yeah.
Why? We got caught up in wanting the thing and the whole auction mentality. I'm dating myself a bit now, but before they had like the buy it now function, which they didn't, it was just a pure auction site. So I remember several times like overpaying for things because why? Because I wanted it. And there was like an urge to get a deal, right? Similarly, in real estate, you don't want to be overpaying for things when we know that there's a likelihood, a statistical likelihood of the market going into recession. To what degree, I don't know, but I know we're due. In fact, some might say a little bit overdue.
Well, with all this that you know of,
Mhm.
then how does that translate into what you want to buy as an investor,
I'm looking for deals, right?
right?
So as an investor, I'm looking to put lipstick on a pig. What I like to do, have you ever seen those signs driving down the highway? It's like, we buy ugly houses,
Sure. Oh,
right?
yeah, of
All
course.
right. I buy ugly warehouses. That's my jam,
Okay.
because that's my skill set. My skill set, I grew up in a construction family. I hold a master plumber's license. I hold an electrical license. So I can do all of the hands-on part. That was a big part of learning the development side of the business. So for me, I need to find something that I can put my specific skill set to, and that is finding something that needs a little TLC, needs to be fixed up. Maybe the people need to get out of it. Maybe the people just don't want to do the work. Maybe they're getting
Hmm.
older and that type of thing, and just don't feel like spending because it can be a disaster trying to find contractors that are reliable. So being
Hmm.
that I do a lot of the work myself, that's kind of like my specific unique capability.
Right.
So that's what I'm looking for is like, so I'm looking for things to cool off a little bit, or just find people that are looking to sell at a reasonable number, maybe based on their current rents, something like that, on a cap rate based on current rents.
Hmm.
But we can't buy for tomorrow's dollar because I don't know what tomorrow's dollar is going to be, but I do know
Sure.
what today's dollar is. Does that make sense?
Yeah, yeah, it
Yeah.
does. It does. So you're looking for people that maybe are in a situation they're wanting to get out quickly, or you're looking for things that just really need a lot of work, a lot of hands-on work. Do you have a specific area and size?
I like Hialeah is one of my favorite markets, right? I find an arbitrage in between C-class markets and A-class markets. So Hialeah is an industrial area here in Miami, and it's really, really great. People love the area. People want to be in the area. It's centrally located. It's close to the airport. But anywhere in Miami, frankly, would certainly work. Just as long as it's close to kind of major arteries. I would
Mhm.
travel further. It might not be a buy and hold, but it might be a buy and flip. But it all depends kind of on the opportunity.
Okay. So you do buy and hold and buy and flip.
I
And
would for the right pricing. Yeah, my main strategy is buy and hold, right? Because I'm interested mostly in cash flow. But if the right deal came along, I would do like a deal where I go in, take something, turn it over, and then sell it, a year later once it's been
Mhm.
improved and tenanted.
Yeah. Okay. Okay. And you've done, how many times have you done this over the years, you think?
Ooh, probably 5 or 6,
Hmm.
just because I've been busy building a brokerage. It's funny, like you can't wear two hats at once, right? So my thing is, I started investing at 20, I think I bought my first property at 24, and did rehabs, did fix and flips, that sort of thing. Some did well, some got my head handed to me. So I learned lots of lessons along the way. I learned
Hmm.
most importantly to stick to what you know best. But the nice thing about brokerage is it gives me the flexibility at this point so that I can, if I need to work on a project, I can increase or decrease, the brokerage activity as needed.
Sure. Sure. Okay. So you're looking for property, industrial property that you can fix up or that just needs, yeah, needs some needs some lipstick. Um, maybe around major arteries and maybe is ugly, old, has deferred maintenance issues. That's the kind of property that you're looking for in and
Definitely.
around Miami, major
Definitely.
arteries. Okay.
Correct.
Okay.
Yes.
What size?
There are some economies of scale that work better. So I would say probably 20,000 square feet and up. Maybe
Okay.
like probably there's a sweet spot around maybe 20 to 50,000. I can't get it so big that I can't handle the scope of the work because it can be difficult with contractors.
Hmm.
So somewhere in like the 20 to 50,000 square foot range would be something I would feel comfortable with.
Okay. Ter- Terrific. All right. And so are you also listing properties? We've talked about your investing, but we haven't talked about your listings. Your
Sure, sure.
listing.
Yeah. So I actually wound down one of my coaching program, actually two. Elite Investors just finished up about a month ago. And then the Listing Agent Accelerator, we just have our last class going through and they're going to be finishing up in August. So the listings will be ramping up accordingly as my schedule opens up.
Okay. Okay, great. And again, you're sticking with mostly with industrial, maybe some multifamily, but mostly industrial.
So here's the thing, in terms of what I want to buy, it's
Mhm.
industrial, period.
Mhm.
But in terms of what I'm willing to sell and know how to sell, I'll sell all the four major property types, whether it's office or retail or
Okay.
multifamily. Yeah,
Mhm.
any of those will work because this is one thing that we've talked about before is that once you understand how to underwrite a property, money comes in the form of rents, money goes out in operating expenses, what's left over is NOI. Like it doesn't matter whether it's an apartment building, a warehouse, retail, or an office building.
Gotcha.
So I
Okay.
feel comfortable with selling any of those. So any of those that would work, that we could bring the market would actually sell. Yeah, I'd be open to.
Hmm. And you stay only in the Miami area. Is that right?
So with brokerage, I do Dade and Broward counties, and I've done
Mhm.
deals in Palm Beach County before. But just from if I can do investment grade properties, I can go further, you know. But typically, if it's something going to be an owner user example, then that's going to need to be somewhere where it's within an hour drive, you know.
Okay. Yeah.
But I certainly will drive further if it's a bigger opportunity. But for the most part, like within an hour drive is doable.
Okay. Awesome. Cool. Wow. Well, it's been fun. I've learned a lot. I like the 18.6 year cycle. No, yeah, 18.6 year cycle
Mhm.
is definitely something to pay attention to. And I never realized there was a time frame on. I mean, I always knew that it was, the economy was cyclical like that,
Sure,
but I didn't
sure.
realize there was a definitive time frame on it. So
Yeah,
that's
and again, it's the average, but we just know that it's bound to happen soon, you know?
yeah, yeah, right. Yeah, that's interesting. That's good to know. Good to
Want to
know.
hear a fun little fact, right?
Yeah, of course.
When they've been tracking these 18.6 year cycles, right? What they typically found was right before a market dip, everybody's employed, everybody's doing well, and ready for this? The biggest building in the world is being built. It's kind of like a things are going so well, let's do something audacious to kind of like plant our flag, right? So if you look at some of like the buildings that have been slated, and like I just saw an advertisement for a building, oh, it's the tallest apartment building on the eastern seaboard here in Miami, right? You
Mm.
got you got other plan. I don't know if is it in Dubai or one of those where they're building these huge buildings. So whenever you start seeing the biggest building in the world being built, just know that's usually, a precursor to a downturn.
Wow. Okay, that's
It's an
that is it.
anomaly. It's one of
Yeah.
those weird things, but yeah. I always thought it was kind of interesting. And that by the way, that's one of Philip Anderson's kind of big kind of like causation isn't correlation, but it just or correlation is not causation, but it
Right.
tends to precede a market downturn. So if you ever see a headline, oh, they're building the tallest building in the world right now, watch out.
Hmm.
There's likely something to happen because like I think it's just about 100% of the time within a couple of year period something winds up happening, you know.
Interesting. Interesting. Okay. Wow. Got to watch out for that tall building.
For sure.
Yeah, watch out for that. So anyway, well, awesome. Well, thank you for coming on today and sharing your insight and everything that you've told us about the market cycles and about being in real estate and buying and selling and investing and all that. It's been awesome. And yeah, so fellow deal makers, I invite you to reach out if you have further questions or you want guidance on an issue that Christian discussed today, or better yet, if you have a deal that he might be interested in, of course. The best way is to get to Christian is by emailing me at susan@thedealscout.com. And as always, if you'd like to appear on the Deal Scout to talk about your deals, I'd love to hear from you. Simply reach out to me at, again, susan@thedealscout.com. So that's it for now. I hope you have a terrific day and we will see you again soon. This is Susan Riley with the Deal Scout signing off.